Director of RITES. Welcome to ET Now. My first question, how have you, in this environment of tightening interest rates, commodity prices going up, actually see an expansion of margins? What did you do?
Good morning. So our Q1 results have, shown that this is a V-shaped recovery. We are surging ahead, and basically we have been focusing on core areas of consultancy, which we have been tightening our expenditures. We have been concentrating on focused, timely execution, better deliveries, and that's why we are tightening and getting better margins. And more so, this is also coupled with more and more growth in our international consultancy, which is giving us very good margins.
Okay, so that's how you try to expand your margins. But tell me something, going forward, you've talked about the robust demand, the V-shaped recovery. So if this V-shaped recovery is going to continue, should your shareholders, the analyst community, the viewers of ET Now expect margins to continue to grow going forward in the remaining 3 quarters of the financial year, or this is what they should pencil in?
You see, we have 4 streams of revenue, turnkeys, which are slightly very low margin streams of revenue. We have consultancy, which are higher margins, which give us higher margins. And within consultancy, international consultancy gives us the highest margins. And then we have the Expotech and the general leasing business. So going forward, as you can see in our order book, the Expotech order book is just about 300 crores or left. And that's a high margin area. So while we are trying to get some more orders, more Expotech orders by the balance quarters of this year, but that will translate into revenue in the next year. So going forward, while all our efforts will be there to maintain these level of margin, but yes, since the mix of the revenue within the 4 streams is going to slightly change in the coming quarters, it may not increase dramatically over the current levels of margins, but yes, we'll make all efforts to maintain these levels of margins.
So how would you look at operating leverage? Because the way you're getting order inflow, the way the margin is increasing, execution is increasing, do you think that operating leverage will also provide some sort of stability to the margins?
Yes, in fact, if you see as our guidance given when I've spoken after the Q4 results last year, going forward, our turnkey segment, the execution is going to increase. We have taken a lot of steps for more disciplined execution in our turnkey segments, and that is what has come out. If you see, the turnkey revenue in this quarter is 181 crores, which is up from Q4, which was only about 145 crores. And so going forward, we'll be concentrating more on the execution of our turnkey projects, execution of our balance Expotech orders, and getting more and more consultancy orders, especially in the international consultancy. In fact, that was another thing which we had targeted at the beginning of this FY. Last year, we had got an overall international consultancy of about 100 crores. And this year in Q1 itself, we have got 45 crores in the international consultancy. So that's a healthy trend. And going forward, I think we're going to definitely go more aggressively in this sector.
In terms of your order book, can you just talk to us with volatility in currency, which means import becomes expensive, and volatility in raw material prices? How is that having an impact on the overall order book? As in, some may be fixed, some may be passed through. Can you just tell us how are you managing that risk?
So you see, our international commitments are more in Expotech of rolling stock and in international consultancy. So that way we are in fact, we are to an advantage. And our order book, if you see, is currently about 5,100 crores. And that has a turnkey segment of about 2,500 crores, a consultancy of about 2,100 crores, and the balance about 350 crores of Expotech. Now, in this quarter itself, we have got about 90 orders of totaling to about 700 crores. So we are showing, our growth in order book. It's an order book growth of about 250 crores in this quarter vis-a-vis the quarter ending 31st March. So I think going forward, we are moving forward. Our order book is growing, and we will continue to grow.
All right, sir. Thank you so much for taking our time for us. Good to get perspective from you. On that note, we're taking a break. Coming back.